There were 45,000 new listings for single-family homes across the country this week, which is actually a big jump. It's 12% more sellers than a year ago. This is the trend I've been talking about as a big theme for 2025. It seems like more sellers are coming out each week more sellers than a year ago. So that'll keep pushing inventory upward. Mortgage rates this week pushed close to 7.25%. It's only 2 weeks into January, and mortgage rates have already hit the high end of the range we forecasted for the entire year. Unlike a lot of forecasters in the mortgage world a few months ago, our projection included the notion that with strong jobs data and some inflation fears, the bond market could indeed push mortgages above 7%, and that's exactly what happened. And it happened quickly. So I remain optimistic that later in the year, the economic news relaxes a bit and rates fall closer to 6%, or even maybe under 6%. The scenarios are possible. And now it's going to be fascinating to see how the bond markets react to like new administration policies. Right now, the sentiment is very bearish. Bond markets have driven mortgage rates back to the highs, and home sales are suffering. Sellers are up, but sales are down. Before we dive into this week's data, I should say that the impact of the Los Angeles fires is very much something we will be studying, though it's too early to see any changes in the data now. There are some signals that we will be watching for. The first thing to note is that California in general has very restricted inventory. So prior to the fires, there were only 17 houses for sale in all of Pacific Palisades, for example. So this is different from, say, a hurricane hitting Tampa, where the real estate market is big enough to move the needle on national numbers. So there are only 6,000 homes for sale in all LA County, which has nearly 3% of the country's population, but less than 1% of the homes for sale. One way in which this disaster may impact the national numbers is that of the thousands of homes destroyed, many are like $3 million homes. And nationally, there are only 16,000 homes over that price available anywhere in the country. So over time, we could see demand impact in other parts of the country for the limited homes that are available in that price range. We might see a resurgence in the Zoom towns, for example, like Boise and Salt Lake City, that boomed during the pandemic as destinations for people leaving Southern California. We will be also watching in LA for things like price increases to see if the remaining homes for sale in the area, in the metro areas, see a price boost because of a sudden flood of displaced people who now must find a new home. So these are important things to track. Our hearts go out to everyone impacted in the fires. I have friends who've lost everything, and it's just so tragic. Over time, our job at HousingWire will be to help everyone understand exactly the market and financial impact that we can measure. But right now, I just want to put my tools in the car, drive to LA, and start building houses. By the way, we have our monthly webinar next week, Thursday, January 23rd at 10 a.m. Pacific. Registration for that webinar is now open. There are some big changes this year with more sellers and fewer sales that we will dive into in that webinar. We'll look at the different local markets, which have been bifurcated across the country, and that may be changing. In the market, we will look for any early LA data if there are signals to be seen. That's next Thursday, January 23rd at 10 a.m. Pacific. There's a link in the description below to register for that. These are limited to 1,000 attendees, and each month we get far more than that who want to join. So click that to reserve your spot now. Okay, let's look at this week's market data. Total inventory of homes for sale dipped to 624,000 this week, single family homes unsold on the market. That surprised me a little bit. The total inventory dipped because because of like purchase demand. Still early in the year, and the new market is still emerging, and I expect next year we'll see an inventory increase. There are now 24% more homes on the market than a year ago. We're expecting inventory to grow for 2025 and end the year with about 15% more homes on the market. So in this chart, I've illustrated 10 years of inventory changes, and I've highlighted January 2018. You can see that the market still has a fair bit of growth before it reaches the old normal levels of inventory. There are still 19% fewer homes on the market now than in January 2018. By that measure, though, 2025 could be the last year of the era of this really restricted inventory. If mortgage rates stay in the sevens for long, we expect inventory to grow faster, and we'll have to revise our 2025 inventory forecast higher. This week, though, inventory dipped, so we'll see what happens next. So that's the total inventory of unsold homes, which are on the market and you can buy. The supply story in real estate also must take into account the new sellers each week. So this week there were 45,000 new listings for single-family homes across the country. That's a big jump from last year's week, which included New Year's data. There were 12% more sellers this week than the same week in early 2024. 12% more. So this is the trend I've been talking about as a big theme for 2025. It seems like more sellers coming out each week, 10 or 12% more sellers each week, gets us back to that old normal pretty quickly. More sellers than that might trigger price pressure. Home prices could fall if we get more than that coming to market. So that's definitely something we watch for. We mostly focus on single-family homes in these videos, but we should note that there were more condo new listings this week than we've seen in the same week of January for 10 years. So condo inventory is growing too, maybe more. In this chart, the dark red line at the left end of the chart is this year. So see the trajectory. It's only 2 weeks into the year, but it looks much more like the old days than the red line from last year or 2023. The gray lines are the weekly new listings counts for each of the last 10 years. The bright red line here is 2024. And in the post-pandemic era, the defining characteristic is how few new listings were hitting the market each week. So the question is now, is that era over? It's only a couple of weeks into January. So the dark line could turn horizontal, but the early indications are that we'll continue to have 10, 12, maybe even 15% more sellers each week in 2025. That's a significant change. I don't expect a rocket here. I don't expect a flood of sellers. I don't know why a big flood would happen, but we do see growth. So there were 45,000 new listings, single-family homes this week. And if there are more than 50,000 next week, so 45,000 now, if there are more than 50,000 next week, that'd be notable. And we'll keep our eyes out for that. So we'll make sure to cover this new listings trends in more detail, especially local, in the webinar next week. So let's look at the demand side of the equation. So there were just under 41,000 newly pending contracts for single-family homes this week. So that was 3% fewer than the same week a year ago. So 12% more new listings and 3% fewer sales started. So that's a very notable change from late last year. So in this chart, the dark line for 2025, the very left end of the chart there, you can see it's the same or just a bit lower than the sales rate of 22 and 23 and 24. This is tracking the new contracts started per week. At the right end of the chart, you can see the bright red line from 24 and how it was above the year prior for most of the fourth quarter. As of now, that trend hasn't continued into this year. So there are just 252,000 single-family homes total in that contract pending stage. This is basically unchanged from a year ago. It's less than a 1% change from 2024 sales levels. We've been at 5, 6, 7% sales gains from a year prior. But after a few weeks like this one, those gains have pretty much evaporated. The home sales gains that we saw in the fourth quarter are now gone. I've talked about how at HousingWire, we expect about 5% home sales gains for the year. That means 4.2 million home sales in 2025, up from 4 million. That's the momentum we had from the fourth quarter, but January is starting with no gains. So that forecast is something we're very much keeping our eyes on. Mortgage rates continue to climb, and we can definitely see the impact on transactions. On an absolute level, home sales should pick up next week as we inch closer to the spring. So 41,000 single family home contracts started this week. Next week, it should be in the upper 40s, but that still could be lower than a year ago. The 10-year Treasury yield is up again today, so there doesn't appear to be any mortgage relief in the short term. The median price for the homes that started contract this week, the newly pendings, is just under $375,000. This is the price point that Americans are buying. It was a smidge lower than a week ago and barely above the prices paid a year ago at this time. So home prices by this measure, the weekly new pendings price, have been about 4 or 5% higher than a year ago. Now that they're trending more like a 2% yearly increase, and this year is barely moved. This week has barely moved at all. So the demand impact we can see with transaction volume looks like it's manifesting in fewer sales and also in weaker sales prices. With more homes on the market, with fewer offers, home prices are not appreciating. So the median price of all the homes in contract is $395,000 now, which is just under 4% more than a year ago. So those 252,000 home sales will close mostly in January and February. So there's still a little gain in this measure because many of these sales that they're in process started the contracts back in the fourth quarter. So the takeaway for home prices as we roll into the new year is that there is almost no momentum for home price gains now. And the headlines with the traditional measures like the Case-Shiller Index will be catching up to that message soon. We'll be very interested and very interesting to see if elevated mortgage rates turn home prices negative in the coming months. As we start the home buying season, fresh inventory gets listed and a lot of the stale stuff is withdrawn over the holidays. As a result, the percentage of active listings with price reductions ticks down now and for several more weeks. So even though we see weakness in sales prices, there are relatively fewer sellers taking a price cut each week right now. So this week, 33.9% of the homes on the market have had price reductions from their original list price, 33.9%. So this chart is very useful right now for the next couple of months. At the left end of the chart, we have 3 lines to pay attention to. In 2023, that's the 23 is the light red line here at the left end of the chart. The market had been ultra slow in the fourth quarter of 22, so price cuts were elevated. But by January, those price cuts were falling quickly each week. That showed renewed buyer interest and boded bullish for home prices for the full year. And in fact, 2023 proved to be a recovery year in home prices. We could see it in January in this price cuts line. So see how that light red line kept improving through April and May. So contrast that to last year when the market was surprised by mortgage rate surge in the first quarter. And the bright red line registered that and turned higher much earlier in the year with more home sellers cutting their price. So right now we're in between those two. And in the next few weeks, watch the slope of this change in addition to the absolute level. So there will be more fresh inventory in the next few weeks, so the percent will be fewer. But if a bunch of the existing cohort isn't getting offers, those will cut their prices and the slope of the dark line will be less steep. That's what I'm expecting. And that's what we'll see in the next few weeks if it comes to pass. So there's very little in the data right now that sees home sales or home prices trending higher. The signals are pretty bearish right now. Hang in there. Okay, that's all the data we have time for today. The HousingWire Altos webinar is next week, Thursday. Click the link below to reserve your spot because those fill up fast. If you need to communicate about this housing market with your buyers and sellers, you should join us at Altos Research. Go to altosresearch.com. You can now sign up for a free Altos account to get all your local data. We'll help you dive into the local market, help you start helping people understand the market today. So go do that. Check it out. There's a link for that in the description below. More next week.